Let's bring in Chris Campbell. He was appointed, confirmed by the U.S. Senate to serve as Assistant Treasury Secretary for Financial Institutions and now the Chief Policy Strategist for Financial and Risk Advisory firm Kroll. Thank you, Chris, for being here. You know, thousands of people were affected, their paychecks frozen after that payroll company, Patriot Software, wasn't able to get the clients their money because it banked with SVB. So what other effects could we see because of the failure?
You know, it's actually quite miraculous, actually, how well the system works in this. And obviously, the bank failed, and there were two bank failures in the United States, which is never a good thing. But the companies and sometimes even countries sometimes do fail, but the system worked. The Federal Reserve and Treasury Department stepped in really quickly and assured depositors of were able to get their money out. And so, yeah, there was a temporary hiccup for depositors not being able to withdraw their money, and there were some hiccups on payroll. But at the end of the day, and 4 days later, candidly, over the weekend, depositors were able to get their money out, and we have seen some flight to bigger banks, as your lead-in suggested. But the confidence really has been restored. We don't see a real run on the banks, which would be really catastrophic if confidence would have been eroded and the government hadn't stepped in as quickly as it had.
Well, I'm glad that they got their paychecks. Hiccups are not fun for anybody, especially if you are relying on that money. But I'm glad you brought up a run on banks. Now, even though they were able to rebound a bit, the picture of people standing outside of those bank ATMs trying to get their money is certainly bad PR for banks at a minimum. So how panicked do you think not only those banks were, but the entire banking industry and the federal government at the look at those pictures that are swirling all around the world thanks to social media?
Yeah, look, I don't think it was just the DC or the banks. I think everyone was panicked, candidly. I think that that people have to have confidence in the banking system. People have confidence that when they put their money in the bank, they're going to be able to withdraw it when they need it. And so, again, that's, luckily the system, again, worked as intended after the bank failure. Of course, there's going to be many investigations as to what happened to the bank to have it fail. But what's really important right now is that there's confidence in the American system, and that the people who have their money in Silicone Valley Bank and Signature Bank are able to get their money out and continue banking the way that they have in the past.
There's more good news is banks are actually increasing the yields on savings accounts. So how can we all take advantage of that? I think if that's the right question.
Yeah, it's a very good question, and it's going to have some significant impact in lots of ways. As banks raise the yield on interest on depositors, it's going to encourage people to save more money. But the reality is, kind of in economic terms, the more people save, the less people spend, and the less we spend, the more likely we're going to be into recession later this year, which is what the Federal Reserve has been trying to do by raising interest rates for a long time. But to get inflation under control. But I think the bank failures are likely going to hasten that because I think you're going to see regional banks and community banks do raise that yield.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.